Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
I'm doing great. How are you today, Will?
Doing all right. In a different location, different state, different time zone, all the above for today's episode here in Ohio. So got to come across the Southeast and Midwest. Got to, see a lot of country. But Ben, you're also on the road, or I guess
Yeah, been
almost.
on the road, been on the road for days now, it seems, which if you remember right, it was about this time last year. I was on a long road trip, eight days in a row of travel when I lost my car. And so I've gotten smart. I'm now flying different places instead of driving. So I am ready to be home. I'll be home this afternoon. Looking forward to being back in Central Missouri.
Yep. So, man, that's kind of surprising. That was almost a year ago, or right at a year ago. Just a little tidbit for listeners who didn't know. Ben unfortunately got his car stolen in St. Louis a year ago. So hopefully not
It
too
was,
scarring.
it was a
He'll
rough
come
go.
out. Yeah. All right. Well, talking about a bit of a rough go, we have some moderate to slight movement in the markets, kind of down, but some hidden gains in there. So I'm going to give a quick rundown here. Looking at that March corn contract up 4 cents at 4.45. December corn contract for 2025 is up 1 cent at $4.40. That January soybean contract down 8 cents at 9.82. November soybeans down 6 cents at 9.98 for that 2025 contract. Soybean oil on a cents per pound basis for March down 0.97 cents at 42.07. Soybean meal by the short ton down $2.30 at 293.40. Looking at that March wheat contract down 8 cents at 5.50. Cotton for March of 2025 down 0.89 cents at 69.06. December cotton down 0.81 cents at 70.33. And then that West Texas Intermediate Crude Oil contract up $2.45 a barrel at 70.58. So Ben, again, just a lot of slight adjustments here, kind of in that holiday mindset on the markets. We see that increase on that crude oil maybe related to the holiday driving season, but really not a lot of large changes here.
Yeah, absolutely. And I would simply say that as we get closer to the holidays, these shifts will be rather minor, or at least that's the expectation. As I look at the price moves already this morning here on Tuesday morning, we're down across the board. I kind of expect that to be a general trend. There's not a whole lot of news left to really move these markets higher, and that'll come in January. So I think we may drift lower in the futures market as we head into the holidays. There is opportunities, and you and I have talked about that for some of these basis markets to see a little pop here as elevators and users bid higher to get holiday delivery. But I think the futures markets continue to drift lower here for the next couple of weeks.
Well, Ben, the next big market moving event might not be until the January WASDE when we get a better picture on what this year has really looked like overall. But we did get some new numbers from the December WASDE, a bit of a revision there, adding some bushels of demand for the corn balance sheets for this coming marketing or this current marketing year now. But Ben, what was the impact maybe of that December WASDE report coming out from USDA?
Well, so this was not in some ways a traditional December report. We're used to seeing very little, if any, changes in December, and we got some pretty large changes on the demand side, especially for the corn market. For domestic 2024-2025 corn, we saw higher use, 50 million additional bushels of corn ethanol use, 150 million bushels of additional corn export use. Our listeners might be sitting there saying, wow, 200 million bushels of additional domestic use, and yet the market was only up 4 cents last week for March. And I would agree that that does seem a little surprising, but I will admit that I think many of us anticipated this, and we're waiting for USDA to at least reflect what the data had been showing. I will say that there was a lot of people on social media, a lot of analysts that were trying to use these numbers and expectations as a hedge, or USDA tilting their hand of what a potential trade war could look like with Mexico, or what the incoming administration means for sustainable aviation fuel. Frankly, I'm not sure any of that was taken into consideration. The current demand data just signaled higher 2024-2025 corn use, and so I think that's why the market was rather unimpressed. Certainly had been anticipating it. I think that was already priced in. So On the global side, the changes also came on the corn side there as well. Global corn supply or ending stocks came in well below all pre-report expectations. So a bullish factor on the global corn side as well. The trend has been tightening domestic and global supplies of corn, very ample supplies of soybeans.
Yeah, and Ben, going back to you talking about the market largely baking that in, that kind of seems to be the trend on a lot of this movement. A lot of it, like you said, was expected. But looking at some other reports, we also got some updates from the November NOPA report going back on that soybean side of things. And we saw maybe a bit of a drop in some of the soybean oil use numbers. So maybe a bit of a bearish factor there as compared to what producers might be hoping for.
Sure, yeah. So the National Oilseed Producers Association or Processors Association report, their members crushed 193.2 million bushels. That was 3.5 million bushels below the average trade estimate, but that trade range was huge, all the way from 191 million bushels up to 270 million bushels. So a very large trade range expected by really the industry, and so this was a new record volume for the month of November. Even though it was below expectations and below what we crushed in October, this was still a very solid month of soybean crush. I think it was the soybean oil numbers that continue to paint a bullish picture, and this is largely driven by exports of soybean oil and commitments of soybean oil. But soybean oil stocks came in well below where many had thought they would be, and just continues to signal record monthly soybean oil use. And again, a lot of that's the export market for soybean oil.
All right, Ben. And then looking elsewhere, a big ticket item for this week that's upcoming, the Federal Reserve Open Market Committee is meeting, talking about their general policy briefing, releasing maybe quarterly expectations. So, Ben, how impactful do you think this meeting is? So this is going to be on Wednesday. We're recording this right now, Tuesday morning. So how big of a market mover might this be?
Well, I think this has the potential to really set sentiment for the next few weeks, not just in the grains and oilseeds, but the broader macro economy and what it means for consumption of high-valued proteins, high-valued travel, luxury travel. I think there's a lot of data that's going to be released, a part of that quarterly report that'll be of interest to market analysts. The Federal Reserve's caught in a very tough spot. They are an independent body, independent of politics, but it is Jerome Powell, as chair of the Federal Reserve, is a political appointee by the president, and is certainly aware that the president doesn't really necessarily like him and would like to see lower interest rates. And Jerome Powell sitting there looking at inflation numbers that came out last week. The CPI index and the producer price index came in above expectations, and it just signals that the price environment continues to heat up. And so as I look ahead, I think the market says that we will see another 25 basis point cut in that short-term interest rate this week as the Federal Reserve meets. However, I kind of expect the Federal Reserve to kind of signal through their quarterly update that we might not see a lot of interest rate movement in the next few months. And I think that'll be disappointing to the market and certainly to the broader economy as we look ahead.
All right, Ben, always good to have your knowledge and information on the program here. I guess looking forward, before we wrap up, to the rest of this upcoming week, what else should farmers and ranchers be paying attention to that could move the market?
Yeah, so we get that Federal Reserve interest rate announcement at 1 o'clock on Wednesday afternoon. That'll be of high interest. I think for me, another piece of economic data is on Friday morning. We get personal income and expenditure data for the month of November. This has been something we've been watching very closely because we continue to see U.S. consumers continue to spend. And at some point, it's at least deemed that this is unsustainable. And so at some point, we will start to see that play out in the data, but it hasn't as of yet. Cotton Jennings come out this Friday as well, and we have a cattle on feed report for our livestock friends Friday afternoon as well. So kind of a busy week with a lot of information right here before the holidays. But again, I think the futures market's kind of in a downward trend into the holiday season. So.
Well, if you want more information on that cattle on feed report, check out our sister program, the weekly livestock market update. But Ben, like I said, it's always a pleasure to have your knowledge and information here on the program. I'm Will Robinson on Brownfield.